What's up guys, Ryan here back with another video. And in today's video I am going to be short on the Dow Jones. Okay, we have SMT divergence on the highs here. We are in a premium market. We've traded into a fair value gap here, right? Order block. And then we have William% signatures for lower prices. So we're going to want to see distribution come in and large candles start to occur for the sell side down here. Didn't get a great fill, to be honest. But I like how we're consolidating in here, right? Manipulation, took out a high. And now we kind of want to see this high hold in here, right? And we want to start to see price move lower with some big candles. I'm not going to be talking as much, guys, in this video. Currently pretty sick. So we really want to see price start to reject here on US 30. Price may want to come up and stab these equal highs before NASDAQ wants to move lower. Yep. So we want to see continued prices lower. If this fair value gap can hold, right, and price can come up here and take out these highs, that would be pretty decent too. But again, the fact that we've came up into this fair value gap and rejected, we want to start to see big candles lower for our TP, right, for the residing liquidity down here, right? And this is the thing, guys, we want to be looking to get in the low resistance liquidity run pair, or the pair that's most likely to have big candles in the direction that we're trading. And right now, that pair would be the Dow Jones, right? It's not in NASDAQ. NASDAQ looks much stronger than the Dow, and so that is why we look for the low resistance liquidity run asset class that's going to give us these big down close candles, right? We also have William% characteristics on the Dow, right? We don't have it on US 100. So we want to see big candles down and through this low. Let's see if there's any balanced price ranges on the 30-second or even 15-second chart. Optimal advanced signatures to go long on NASDAQ. Yep, so this fair value gap actually overlaps with the balanced price range. Okay, the fact that we posted a low in here and then starting to move back above, we've come back to break even. I'm going to take off half my position here, guys. right? Because expecting the delivery that we want to see, right? We want to see big down close candles down and through this low. Because we're not getting that, right? We can manage our risk, and also the William percent R is coming back above the high, right? Which is not ideal. So what we've done is we've cut our risk in half, right? And we're just going to let our stop loss do its thing, and we're going to let our TP do its thing, right? Just based off of price action coming back up into here, reclaiming the gap after we've already been in it once, twice. We spent a lot of time in here. So we could have reasonably expected for price just to run right through this low. Did we get that? No, we did not. Right? We did not get that signature in price. So what do? Okay, price comes up to our entry, right? To this fair value gap. We're going to take half off. We're going to start to scale out, because the more time it spends in this area, okay, and as time passes by, right, where we're in the trade and we're not getting the delivery of price that we're expecting, we're going to be wrong a majority of the time, right? And so here we're at the top of the gap. So now, right, it's going to fly through our stop, but we're only going to lose $200. Right, as opposed to losing 500, right? So as the trade duration is going on, okay, we're preserving capital, right? We're also giving ourselves a chance to compound capital, right? As well as letting the trade breathe, and ultimately letting our stop loss do its job and our TP to do its job. Right, so this is how professional traders manage trades, guys, and how we can look at high resistance liquidity runs and low resistance liquidity runs, right, to manage our trade. Right, so we got our signatures, right? This is all we can do as traders, guys. This is all we can do. Right, this is all we can do. Execute our plan. Right. Press the button when we should. Okay, manage the trade accordingly as time passes. Okay, and the last thing, let the trade breathe and let stop loss and TP do its job. Right, guys, so this is all we can do as traders, right? We have a present edge in the marketplace, which is optimal advance, right? We have SMT on these highs as well. So let's see if this now newly formed balanced price range gives us support. If it doesn't and we trade back below here, could end up getting like a 15-second setup, right? But this is all we can do, right, guys? Is we can execute our plan, right? Trust in our edge. We have conviction and confidence in our edge, right? And the second thing is manage the trade accordingly as time passes. So if we're not getting the delivery we want to see in price, right, and price comes back up to our entry when we deem that it shouldn't, right? When we have everything in mind Okay, everything in our favor for price to start expanding lower after this fair value gap, right? When price comes back up to this fair value gap, okay, we take half of our position off. Okay, we take half of our position off. Why? Because as time is passing by, right, the longer we spend in here, right, it's showing us that we're not getting low resistance liquidity run signatures. Right, and if we're not getting the delivery we expect, right, and if price is coming back up to our entry 1, 2, 3 or more times, it's likely that we're not going to be correct in the trade. Right? So at this point, right, I was anticipating on losing $500. We lost like $210. Right? So instead of losing 2% on an account, okay, you're gonna lose less than 1. Right? In my opinion, that's a great result. And you may ask, if this hits our TP, why did you take the trade off? Why did you manage the trade in such a way? Right? And the answer is because I know that I'm going to get my setup here 2 to 3 more times, probably even more, throughout this trading day. Okay, and the last thing is that we let the trade breathe, right? We didn't manually get out of the trade. We let our stop loss and our TP do its job. We're going to watch this gap and see if we're now below the balanced price range. We're going to see if this gap wants to give us any type of resistance here, which I think it should at this point. Don't necessarily have optimal advanced signatures, but this gap should give way and we should target the sell side residing below the market. We're actually going to take a little stab here. Okay. Going to place our stop above the balanced price range. My computer is lagging like crazy. Right, and the reason why I took this trade is because we closed back below that balanced price range. Right, the fair value gap that got traded above. Okay, we want to see these equal lows get tagged. Once they do get tagged, if and when, I'm going to move my stop loss to break even. We also have a balanced price range in here. So now if price comes back above this high, we're absolutely going to be wrong. Right? So my stop loss here, because I've already taken a loss on the day, is going to go above here. Okay, if we get back above here, I'm going to close manually. Just so you guys know why, because we've traded into this balanced price range here and here. So if we trade back above here, I'm going to close the trade. NASDAQ is flying. So we're just going to let this play out and see if it wants to target the sell side here. Right, again, I took this trade based off us being below the balanced price range. Okay, closing back below it. And then we have the sell side resting here. So at this point, guys, I can move this stop actually here. And we're going to look for big bearish candles for the sell side. This is how we manage risk. This is how professional traders manage risk, because we know if we come back above this high, we're going to be wrong. Right? And we're going to target these highs again. And then this is a market that I don't want to be a participant in. Right? Right? Balanced price range in here. Balanced price range in here. Okay, at this point, guys, we need to see big candles lower. And if we don't see big candles lower, we're going to get stopped out. Okay? And that's completely okay too. Right? This is a part of the game. Right? On my original position, I was risking $500. Okay? Even if we get stopped out here, we're only losing $300. Does that make sense? Right? And see, now we're not getting the delivery we want to see just yet. Right? So the longer time spends in here, the higher the chance of us being on the wrong side. Right? With optimal advance, we're targeting low resistance liquidity runs. So when price comes up in here, creates our little SMT divergence, right? We want to see low prices. We want to see expansion, and we're not getting that, right? So as we're coming up into our entry once again, if you want, right, I'm preserving capital. Okay, we're going to take half off. Why? Because the probability, the odds of our trade panning out at this point, looking at the delivery that we're getting, is not very high. Right? So I manage my risk, guys. Why am I going to lose more than I should? Right? Like, we're going to get stopped here, most likely, and that's completely okay. Two great examples of how to manage risk and how to lose less than anticipated. And we'll just let the stop loss do its job. Boom, we're out. Right? So on these two trades, guys, at this point here, do you think that I should be trading for the rest of the day? Well, I know I'm going to trade later on today, probably in the PM session. But after the characteristics of price that we've seen here, right? Is this a market that I want to be a participant in? Right? If we're closing back below balanced price ranges, we have one here, right? We traded above that fair value gap, traded back below, stacked equal lows, right? Came up into this fair value gap. We had optimal advanced signatures on a 10-second chart, balanced price range, okay? We went short, didn't get the delivery we expected, didn't get the delivery we wanted. Right? Price comes back up. I manage my risk accordingly here. I know that if we're going to come back up to this area and not form a low resistance liquidity run, it's going to be a high resistance liquidity run, and we're most likely going to get stopped. Right? The trade is not going to pan out. So what do? My stop gets moved from this high, like this order block, to this low, to this high. Excuse me. Right? And I'm taking half off at my original entry because I know if price is going to trade back above this high, it's going to do so with speed and it's going to stop me out anyway. Right, guys? This is how professional traders manage money. Okay? And I'm done for the session. Right? 2 losses. Okay? For a total of $200 and around $60. Okay, but I was originally risking $500 on that original position. Right? So I lost, right? My original risk on my first position was 2%, let's say. And I only lost 1% over a matter of 2 trades, not 1. Right? So this is how we manage risk, guys. This is how we perform here at Optimal Advance, and just based off the order flow, even if it comes down here and takes out these lows, which it very well could, I'm not interested in this type of market right now. right? I will wait for a different time, and we will hunt at a later session, either in the PM session or whatever the case may be. Right, when PD arrays, excuse me, when PD arrays aren't getting respected, and our optimal advanced setup isn't getting respected, and the fair value gap's just getting traded through, and we're bouncing around in here, I'm no longer interested. I don't even care if price were to come down in this low in the next like couple of candles, right? I'm not interested. Not interested at all. All right, guys, with that being said, okay, it's okay to take losses. As traders, we have to learn how to fail. Right? We have to be a good loser. The best loser wins. Okay? The one who tends to lose the best and who takes his losses like a professional and who manages his losses like a professional, okay? These traders that know how to do these two things, how to manage losses, manage emotions, okay, take losses like a professional, these are the best traders in the world. Right? Because we can have all the data. We can have the best plan, which OA, in my opinion, is one of the best plans on YouTube. For free. You can get it in the link. Okay, in the description. But this is what separates novice traders from the best traders in the world in terms of profitability. Right? So focus on the things that I mentioned in this video. Become a good loser. Learn how to fail. Right? Because we're going to lose. It's inevitable. Right? Embrace the suck, as David Goggins would say. All right, guys, this is another great video. Another great video on how to manage losses. All right? So I hope you guys study this. Watch it more than once, along with the other video that I posted on losses. All right, and until next time, good luck and good trading.